Hi guys! Enjoy John's analysis.
Negative 160. That number appeared on one specific chart this morning. Most Bitcoin holders have never seen it. Most financial analysts covering crypto today are not talking about it. And based on everything that has happened in prior cycles, every time this number reached this level, what comes next has surprised almost everyone who was not watching it. The number is the Coinbase Premium Index. It measures the price difference between Bitcoin on Coinbase, the primary American institutional exchange, and Bitcoin on Binance, the global benchmark. When the index is at negative 160, American institutional capital is selling Bitcoin at a significant discount to the rest of the world. That is happening right now, today, May 27th, 2026. CoinDesk's live markets desk reported this morning that the Coinbase Premium Index fell to negative 160, the lowest level since February 2026, widely viewed as a key gauge of U.S. capital flows, institutional demand, and overall market sentiment. Here's what makes that number worth 30 minutes of your time. This is not the first time it has been here. It has been here 5 times before in documented Bitcoin market history: November 2022, March 2020, August 2023, May 2024, February 2026, 5 times. And every single time, without exception, what happened next was something most people watching the price did not expect. Not because the signal is magic, because it measures something the price does not measure. It measures when American institutional selling has reached the level where it historically exhausts itself. And the moment that selling exhausts is precisely the moment the price is telling everyone to be afraid. That is the pattern. That is what this video is about. And I'm going to give you the bear case too, because there is a competing signal with its own track record that is telling a different story today. You deserve both sides of the data, not one. Stay until the end. Before the data, 30 seconds. Drop a comment right now. Tell me your city, your local time, and one word. When you saw Bitcoin at 75,000 today while global stocks hit all-time highs, what was your first reaction? Panic, confusion, opportunity, or nothing? You have been through this before. One word. Drop it below. Your answer tells me more about where you are in your Bitcoin journey than any price chart, and it is directly relevant to everything we are about to cover. Now let us go through every time this number has appeared before. The holder who needs this video is not someone who has been passive about Bitcoin. You have tracked the market. You have survived every major shock of the last 4 years. FTX, the 18-month drawdown, the recovery to $126,272 on October 6th, 2025, the drawdown that followed. You are still here at $75,000 today, and you are in the middle of a specific kind of uncertainty that Bitcoin content rarely addresses directly. Not the uncertainty of not believing in the asset, the uncertainty of not knowing whether what you are watching right now, Bitcoin falling while global equities hit records, ETF outflows extending to 7 consecutive days, an unknown entity selling $1.3 billion of IBIT in a single dark pool trade this morning, is the beginning of something worse or the final stage of something that is about to end. The Kraken FOMO and FOD survey, October 2024, 1,248 participants. 81% of Bitcoin holders have made decisions based on fear, uncertainty, and doubt. 63% said those decisions negatively impacted their portfolio. The environment you are in right now, maximum headline pressure, falling price, institutional selling visible in the data, is exactly the environment that has historically produced the worst decisions from the most informed holders. Not because they lacked information, because they processed real information through an emotional state shaped by what the price was doing rather than what the underlying data was saying. The Coinbase Premium Index at negative 160 is a data point, not a prediction, a measurement of where institutional American selling pressure is right now, and a documented record of what has followed every prior instance of this reading. That is what we are about to go through together. Before the 5 episodes, the mechanism. Because understanding why the signal behaves the way it does is more durable than memorizing that it does. Bitcoin trades globally and simultaneously across hundreds of exchanges. Each exchange reflects the local supply and demand of its specific user base. Coinbase is the primary regulated institutional venue in the United States, the exchange used by pension funds, ETFs, hedge funds, wealth managers, and registered investment advisors operating under U.S. regulatory oversight. Binance is the dominant global exchange reflecting international retail and institutional flows. When American institutional capital is accumulating Bitcoin, deploying fresh capital, adding to positions, meeting new investor demand through ETF inflows, demand on Coinbase exceeds global demand. Bitcoin costs more on Coinbase than on Binance. The premium is positive. When American institutional capital is selling, meeting redemptions, reducing exposure, cutting positions, responding to macro pressure or client withdrawals. Supply from Coinbase overwhelms local demand. Bitcoin costs less on Coinbase than on Binance. The premium is negative. Crypto quant analyst Darkfoss described the mechanism precisely during the February 2026 episode. Such a large negative premium means Bitcoin's price on Coinbase trades significantly below Binance's price. This situation suggests strong selling pressure from institutions is causing both price declines and premium widening. The critical insight, the one that produces the unexpected outcome every time, is this: the negative premium does not last indefinitely. Institutional selling is not infinite. Every seller eventually runs out of supply to sell, exhausts their redemption cycle, or completes their repositioning. When that happens, the discount on Coinbase narrows. The price on the American institutional venue recovers toward global prices, and historically, global buyers, particularly in Asia, have absorbed the discounted supply during these episodes. Sustained negative premiums often signal market bottoms once selling exhausts, especially if global buyers, particularly in Asia, absorb excess supply. That is from Ainvest's analysis of the indicator published in January 2026. The asset has historically tended to bottom out when selling pressure has become too strong on Coinbase, as eventually new buyers start showing up to take coins at a cheaper rate. That is from NewsBTC's documentation of this pattern going back to the FTX episode. The mechanism is supply exhaustion. The signal is the negative premium. The unexpected outcome is what happens when exhaustion completes. Now let us go through every documented instance. Before the 5 episodes, 30 seconds. We built something around exactly the problem this signal creates for holders. The gap is not knowing the signal exists. The gap is knowing what to do when it fires. Having a pre-committed protocol that converts a data point into an action. Before the emotional weight of a falling market makes the right decision feel dangerous. That is the Bitcoin holder's Bible. A practical decision architecture. A written protocol system that converts on-chain signals, including the Coinbase Premium Index, into pre-committed actions you can sign, date, and execute. People who stay until the end get a discount code. Code is coming at the end. Now let us go through all 5 episodes. The 5 episodes. Episode 1, November 2022. The FTX bottom. The context of November 2022 is necessary to understand why this episode is the most important precedent in the signal's history. FTX had just collapsed. One of the largest crypto exchanges in the world had been revealed as fraudulent. Sam Bankman-Fried had been arrested. Billions in customer funds were gone. Contagion fears were spreading through every corner of the crypto market. Bitcoin was trading below $16,000. The narrative was unanimously negative. Every major financial outlet was running some version of crypto is finished. In that environment, the Coinbase Premium Index fell to its most negative readings of the entire bear market. American institutional capital was selling Bitcoin at a discount to global prices. At the moment of maximum narrative fear, maximum institutional pressure, maximum capitulation. NewsBTC documented the pattern directly. The sharp negative spike alongside the FTX crash resulted in a major bottom for Bitcoin. The mechanism, forced selling from entities with FTX exposure, margin calls, redemption cascades, all of it flowing through Coinbase and creating a discount to global prices. As that forced selling exhausted, Asian buyers absorbed the discounted supply. The premium recovered. The price followed. The unexpected outcome: Bitcoin rallied 50% from the low to above $24,000 within 3 months. The holders who sold at $16,000 because the narrative was maximally negative missed the beginning of the 716% rally that followed. Episode 2, March 2020, the COVID crash. This episode extends the pattern further back and adds a dimension that is directly relevant to the macro context of today's market. In March 2020, global markets experienced one of the fastest crashes in financial history. The S&P 500 fell 34% in 5 weeks. Bitcoin fell more than 50% in 48 hours. American investors were selling everything, including Bitcoin, in a dash to liquidity. The Coinbase Premium Index fell deeply negative as American institutional and retail sellers dumped Bitcoin at a discount to global prices. According to Ainvest's analysis of this episode, in March 2020, American investors sold Bitcoin at a discount, and Asian buyers absorbed the supply. The result was a 70% rally by July 2020. Analysts at CryptoRank attributed this resilience to the contrarian nature of Asian markets. Buyers who treated the American institutional sell-off as a discount opportunity. The unexpected outcome from a macro crash that took Bitcoin down 50% in 48 hours, a 70% rally within 4 months. The pattern documented in 2019 and 2022 as well: American selling, Asian accumulation, recovery. The relevance to today: The current episode features Bitcoin falling while global equities hit records. This is not a macro risk-off environment like March 2020, where everything fell together. It is a Bitcoin-specific selling cycle, which historically has resolved faster than systemic macro crises. Episode 3, August 2023, the mid-cycle floor. This is the episode most directly analogous to the current situation because it had no systemic catalyst whatsoever. There was no exchange collapse in August 2023, no regulatory shock, no macro catastrophe. Bitcoin had been consolidating after recovering from the FTX lows and corrected from approximately $30,000 to approximately $25,000 during a mid-cycle period of low liquidity and institutional repositioning. The Coinbase Premium Index fell to its lowest levels since the FTX episode. CoinDesk documented it precisely. The August 2023 low in the premium occurred a couple of weeks before Bitcoin hit a local bottom around $25,000. Bitcoin then traded range-bound until October, then almost doubled in price by January. David Lewant, head of research at FalconX, commenting on this pattern when it reappeared in May 2024. Always darkest before the dawn. The last time the Coinbase premium was this negative was a couple of months before the massive rally from October 2023 to March 2024. The unexpected outcome from a mid-cycle correction with no systemic cause. Bitcoin nearly doubled from the August 2023 low over the following 5 months. The lesson from episode 3. The Coinbase premium signal does not require a crisis to produce this pattern. It works in routine mid-cycle selling episodes, exactly the kind of environment that most closely describes what is happening in May 2026. Episode 4, May and July 2024, the pre-halving correction. The April 2024 halving had just reduced miner rewards from 6.25 to 3.125 Bitcoin. Post-halving selling pressure from miners meeting operational costs at reduced revenue was creating near-term supply. The broader market was digesting the first year of spot Bitcoin ETF flows. In May and July 2024, the Coinbase Premium Index fell to negative 0.17 and negative 0.19 respectively, the lowest readings since the FTX collapse in November 2022. CoinMarketCap documented that when the index hit negative 0.19 in July 2024, Bitcoin had fallen to $56,000. CoinDesk's editorial characterization at that moment, at least recently, the Coinbase Premium has become a reliable, confirming, and sometimes even leading indicator. The unexpected outcome, Bitcoin rallied approximately 27% from the $56,000 low to reach $72,000 within weeks, before going on to reach $126,272 by October 2025. The pattern from episode 4, even in an environment where institutional ETF infrastructure was new, where selling pressure from multiple sources converged simultaneously, the negative Coinbase premium at extreme levels preceded a recovery. Episode 5, February 2026, the most recent complete cycle. This is the episode with the most precise documentation, and the one that makes today's reading most significant because the complete cycle from collapse to recovery to rally is fully verified. The index reached negative 167.8 in early February 2026, documented by CoinPaprika as the lowest level since December 2024. Bitcoin touched $60,001. ETFs had gone from accumulating 46,000 BTC in 2025 to selling 10,600 BTC in 2026, a structural gap of 56,000 BTC. The index remained negative on 28 of 30 days during the peak selling period. Darkfost's characterization in real time, such a large negative premium means Bitcoin's price on Coinbase trades significantly below Binance's price. Strong selling pressure from institutions is causing both price declines and premium widening. The bear case framing at the time was specific and documented. The Coin Republic noted previous reversals happened when macro conditions improved. In February 2026, job losses hit 108,000 and inflation stayed elevated. The macro backdrop looks worse than before. Despite the unfavorable macro backdrop, Bitcoin still followed the pattern. The recovery documented by AMB Crypto in March 2026. The Coinbase Premium Index moved back above zero to about positive 0.02 after nearly 10 weeks in negative territory. U.S. spot buyers on Coinbase appeared to absorb sell pressure again. Exchange outflows followed, holders moving Bitcoin to self-custody, not to sell. The follow-through documented by FX leaders on March 16, 2026. Bitcoin reclaimed $72,700 as the Coinbase Premium turned positive for the first time in 10 weeks. The rally continued to $82,000 by early May. The complete cycle. Negative 167.8 in February at the cycle low. 10 weeks of negative readings. Premium turns positive in mid-March. Bitcoin rallies from $65,000 to $82,000. a 33% move from the low. The word in the title is not accidental. It is the most precise description of what this signal produces. Every time the Coinbase Premium Index reached these extreme negative levels, the narrative surrounding Bitcoin was uniformly negative. November 2022, FTX finished the asset class. March 2020, macro crash destroyed risk assets. August 2023, mid-cycle exhaustion with no end in sight. May 2024, post-halving selling overwhelming demand. February 2026, macro headwinds and structural ETF shift. In each case, the price confirmed the narrative. Bitcoin was falling, the headlines were negative, the institutional selling was visible in the data, everything pointed in the same direction, and then the signal exhausted. And what came next was not what the price, the headlines, or the narrative suggested. Femex documented the asymmetry of this pattern across the historical episodes. After extreme fear and institutional selling events, the data shows 68% of cases produced an average return of positive 18% in 30 days and positive 40% in 90 days. After the COVID crash, positive 82% in 90 days, positive 580% in 12 months. After FTX, positive 370% in 12 months. The reason this signal carries weight is the asymmetry. That is Femex's characterization. Not a prediction, a documented statistical pattern. The asymmetry exists because of the mechanism. Institutional selling at a discount on Coinbase is not evidence that Bitcoin is permanently impaired. It is evidence that American institutional sellers are completing a selling cycle. The discount attracts buyers who would not otherwise be buyers. Global buyers, Asian markets, long-term accumulators who treat the American institutional discount as a purchase opportunity. When the selling exhausts, those buyers have already absorbed the supply, and the price reflects the absence of sellers rather than the return of buyers. That is why what comes next is unexpected. The narrative at these extremes always points toward more selling. The mechanism points toward exhaustion. And historically, the mechanism has been right. This is the section that separates analysis from advocacy. There is a competing signal with its own documented track record, longer than the Coinbase Premium Index, that is telling a different story today. And a holder who makes decisions based only on the bull case signal, without understanding what the bear case signal says, is using incomplete data. A simple indicator has called every Bitcoin bottom since 2015, and it has not triggered yet in 2026. That is CoinDesk's April 17th headline. The indicator is the crossover of Bitcoin's 50-week and 100-week moving averages, the documented history. The crossover turned bearish in April 2015, close to the bottom of the 2014-2015 bear market. February 2019, close to the bottom of the 2018-2019 bear market. September 2022, close to the confirmed FTX era bottom. 3 instances, 3 perfect calls. As of April 2026, the signal had not triggered. CoinDesk's characterization, suggesting the broader bear market may not be over, and the recent bounce to 75,000 from 65,000 could be a temporary recovery. Bitcoin.com. News on May 23rd added the macro layer, Federal Reserve Chair. Kevin Warsh has been striking a hawkish tone with markets pricing in the possibility of rate increases in 2026. Historically, extended negative readings on the Coinbase Index have either preceded deeper corrections or marked the final leg of a shakeout before institutional buyers return at lower price levels. These two signals, the Coinbase Premium Index and the 50-week and 100-week moving average crossover, can both be historically accurate and currently contradictory. The Coinbase Premium says institutional selling is at the same exhaustion level that preceded recoveries in every prior documented instance. The moving average crossover says the structural bear market bottom has not yet been confirmed. Both can be true if the Coinbase Premium is identifying a recovery within an ongoing bear market, not the final bottom that precedes the next sustained bull run. The February to May 2026 cycle may have been exactly this, a recovery from the Coinbase Premium exhaustion level to 82,000, followed by the current pullback, with the structural bottom still ahead. That scenario is consistent with both signals simultaneously. It is also the scenario that requires the most disciplined protocol, because a holder who interpreted February as the final bottom and is now watching another pullback to the same Coinbase Premium levels is navigating the most psychologically difficult environment Bitcoin creates. The Coinbase Premium Index is the event. The broader on-chain context is the structure underneath it. Here's where every relevant signal stands right now. Coinbase Premium Index, negative 160, at the same level as the February 2026 cycle low. 5 prior instances at these levels, 5 recoveries followed. The confirmation signal that preceded each recovery, premium recovering toward and crossing positive, has not appeared today. This is the watch condition, not the action trigger. NewPL, 0.286. Bitcoin metrics suggest February's $60,000 sell-off may have marked the bottom. That is CoinDesk's May 20th characterization citing multiple metrics, including NUPL. At 0.286, NUPL is in the mid-cycle recovery zone, not in the below zero capitulation territory of confirmed bear market bottoms, not in the above 0.75 distribution territory that preceded cycle tops. Mid-cycle, consistent with the recovery phase. Realized cap, stabilized at 1,008 trillion hour. CoinDesk's May 20th analysis noted that the realized cap stabilized at $1.08 trillion, a pattern historically associated with capitulation completing and capital base stabilizing before recovery. Funding rates in perpetual futures had been negative for months, another pattern associated with the final stages of a selling cycle. RODL ratio, 4.5. The RODL ratio, which measures the dominance of conviction capital in the holder base, is at the third highest reading in Bitcoin's 15-year history. The two prior readings above this level preceded multi-year bull markets. The signal says the holder base is dominated by conviction capital, the holders who have been through cycles and have not sold regardless of price. The competing signal, 50-100 week moving average. Crossover has not triggered. Three prior instances of this crossover were each close to the structural cycle bottom. Its absence in 2026 leaves open the question of whether the structural bottom, as distinct from the episodic selling exhaustion bottom the Coinbase premium identifies, has been confirmed. Bitfinex leverage, data, reset complete. Crypto.news documented on May 21st that Bitfinex confirmed the open interest reset of $1.5 billion, clearing the leverage that built during the rally to 82,000. A leverage reset removes the fuel for forced liquidation cascades. It does not guarantee a rally, but removes a specific downside risk. The Coinbase premium at negative 160 is the watch condition. The confirmation is what matters for action. In every prior episode, the recovery was confirmed not by the negative extreme itself, but by the premium recovering toward and then crossing into positive territory. The timing of that recovery varied. The confirmation always preceded a sustained move. The February 2026 cycle showed the confirmation sequence with precision. Premium reaches negative 167.8, remains negative for 28 of 30 days, turns positive on February 7th. Bitcoin rises from 60,000 to 68,000 in 48 hours, turns positive again in mid-March for the first time in 10 weeks. Bitcoin initiates the rally from 65,000 toward 82,000, confirms positive in April with 599 million in ETF inflows. 4 to 8 weeks of upward momentum follows. The confirmation is not a single data point. It is a sequence. Premium stabilizing, then recovering, then crossing positive, then ETF inflows confirming institutional reentry. A holder with a pre-committed protocol defines this sequence as a watch condition in advance, not as a real-time judgment made under the emotional pressure of a falling market. The watch condition monitors the premium. When the recovery sequence begins, the protocol has already defined the appropriate response. Without the pre-committed framework, the same confirmation sequence produces a different outcome. The premium turns positive and the holder wonders whether it is real or temporary. ETF inflows arrive and the holder wonders whether they will sustain. The price begins moving and the holder fears it is too late to act. By the time emotional confidence arrives, the move is partially completed. That is the pattern behavioral finance documents across asset classes. Not that holders lack the information, that they process real information through emotional states that delay or distort action. The 60% reduction in strategy deviation from written, pre-committed plans, documented in the 2024 behavioral study, is the most reliable improvement available to any holder watching this signal today. Here is the specific architecture that converts today's data into systematic action. The weekly protocol check, 5 minutes, once a week, 4 questions. 1. Is the Coinbase Premium Index negative, stable at the negative extreme, or beginning to recover? Today, negative 160, at the same level as the February cycle, low, direction unclear. Status, watch condition active, no confirmation yet. 2. Has NUPL crossed 0.65? Today, 0.286. No. Protocol action. No distribution triggered. 3. Is the MVRV Z-score approaching 6? Today, below 1. No. Protocol action. No distribution triggered. 4. Has any signal in my written protocol been activated? Today, no. The watch condition is active. No action trigger is fired. The protocol says, hold your position. Monitor for Coinbase premium recovery. Do not act on the headline. Close the application, the distribution ladder. 3 predefined rungs activated by on-chain signal convergence, not by price or headline events. Rung 3 requires minimum 2 of 3. NUPL above 0.65, LTH distribution above $500 million per day, SCCI sell signal. None of those conditions are present today. The distribution ladder is not activated, the reacquisition protocol. Predefined re-entry conditions for capital distributed near prior cycle peaks. The Coinbase premium recovering toward and crossing positive, confirmed by ETF inflows of the magnitude documented in March and April 2026, is a legitimate reacquisition signal, but only if it was defined as such in writing before the confirmation arrived. A holder who defined this confirmation trigger before today's negative reading has a clear action when the sequence completes. A holder who tries to define it now, in real time, with Bitcoin at 75,000 and the premium at negative 160, is making a judgment under exactly the emotional conditions that produce the worst decisions. The bear case protocol adjustment. The non-confirmation of the 50-week and 100-week moving average crossover requires a stress scenario. What happens if Bitcoin retests the February lows or extends below them before the structural bottom is confirmed? Is the never sell core percentage set at a level that survives a move towards 60,000 or below? Is the reacquisition protocol calibrated for potential deeper accumulation levels? These questions have correct answers, but the correct answers are only available when the questions are asked in neutral conditions, not when the price is already falling and the premium is already at negative 160. Every holder watching this video will be tempted to make a prediction about what the sixth instance of this signal means. The bullish prediction, 5 out of 5 prior instances led to recoveries. The mechanism, institutional selling exhausting, global buyers absorbing discounted supply, is intact. The structural signals are not in distribution territory. This is the same setup as February 2026. February led to a 33% rally. The bearish prediction, the structural bottom signal has not fired. The macro backdrop is more uncertain than at prior recovery episodes. The ETF institutional outflows are the most sustained of this cycle. The competing signal says the bear market may not be over. Both predictions are being formed before the confirmation data. The recovery of the Coinbase premium toward positive territory with confirming ETF inflows is available. The honest position is not a prediction, it is a structure. The signal says institutional American selling is at the same exhaustion level that preceded every prior recovery in this signal's documented history. The confirmation of that exhaustion has not appeared. The competing signal says the structural bottom may not be confirmed. The on-chain structural signals are not in distribution territory. The most common misuse of this signal is acting on the negative extreme rather than waiting for the confirmation. In every prior episode, the negative extreme was the setup. The positive recovery was the signal. Holders who acted on the setup without waiting for the signal consistently generated worse outcomes than holders who waited for the confirmation. Acting on negative 160 without the confirmation is hoping the fifth instance matches the prior 5 before the evidence arrives. Waiting for the confirmation is using the documented pattern correctly, and with the knowledge that the confirmation has preceded every prior recovery, while acknowledging that confirmation may be weeks away or may require a lower low first. That is not a comfortable position to hold. It is the accurate one. You made it. 5 episodes, 1 mechanism, 1 open question, and 1 signal that is telling a different story that you needed to hear. Here is the complete picture as of today, May 27th, 2026. The Coinbase Premium Index is at negative 160, the same level as the February 2026 cycle low. 5 prior instances at or near this level. November 2022, Bitcoin rallied 50%. March 2020, 70% by July. August 2023, near doubled over 5 months. May 2024, 27% in weeks. February 2026, 33% to $82,000. In every prior instance, the unexpected outcome was the same. American institutional selling exhausted, global buyers absorbed the discounted supply, the Coinbase premium recovered, and what came next surprised the majority of holders who were focused on price. The confirmation has not appeared today. The watch condition is active. The recovery sequence, premium stabilizing, recovering toward positive, crossing positive, ETF inflows confirming re-entry, is what the data requires before any prior instance became an action trigger. The competing signal, the 50-week and 100-week moving average crossover, has not fired. Its 3 prior instances each marked confirmed structural bottoms. Its absence in 2026 leaves the structural bottom question open. Both signals are real. Both are documented. A protocol that functions correctly under both outcomes does not require resolving the tension between them. That is what the Bitcoin holder's Bible gives you. The Coinbase Premium Index has a documented watch condition and reacquisition trigger, written in advance, not defined in real time under pressure. The distribution ladder with 3 predefined signal-based rungs that have not activated today. The never sell core calibrated to survive the bear case stress scenario. The weekly protocol check. 5 minutes, 4 signals, 1 answer. The complete on-chain framework with current readings for every metric we covered today. and the 6 composite holder profiles, including the holder who saw the February negative premium, added aggressively before the confirmation appeared, got shaken during the subsequent volatility, and missed the confirmation-triggered rally, and the holder who waited, who had the recovery sequence defined as a watch condition in her written protocol, who acted systematically when the confirmation arrived in March and positioned through the move to 82,000. Same signal, same data, different architecture, completely different outcome. Regular price is $54. The code is Signal26, SIGNAL206, 50% off, $27. Link is in the description and pinned in the comments right now. One number in context. The holder who saw the February negative premium acted without waiting for confirmation, got shaken out at 65,000 before the recovery, and missed the move to 82,000. Left $17,000 per Bitcoin on the table. The system that provides the watch condition, the confirmation trigger, and the discipline to wait for the sequence costs $27. The cost of the signal without the system is in the historical record. The cost of the system is in the description. Code is Signal26. Link below. Before you close this video, one action. Open CryptoQuant right now. Find the Coinbase Premium Index. Note the current level. Note the direction over the last 48 hours. Is the negative premium deepening toward negative 200? Or is it beginning to stabilize near negative 160? The direction is more important than the level today. Deepening means the selling cycle is still building. Stabilizing means exhaustion may be approaching. Recovering means the confirmation sequence is beginning. Write the level and direction in the comments below. Date it today, May 27th, 2026. That is your first entry into the watch condition that has preceded every recovery in the signal's documented history. If you want the complete framework for converting that watch condition into a pre-committed action when the confirmation appears, the Bitcoin Holder's Bible is $27 with code SIGNAL. Link in the description. The next video covers exactly what the confirmation looks like. The specific premium recovery level, the ETF inflow threshold that has validated prior recoveries, and the on-chain signals that converge to confirm the sequence is real and not a false positive. Subscribe so you do not miss it. And if this video changed how you understand one data point, share it with one Bitcoin holder you know who is watching the price at 75,000 today, without the mechanism underneath it. Because what the price says and what the signal says are different things. And every time those two things have been most different, at negative 160, what came next surprised almost everyone watching the price.